All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. Let me go ahead and grab our bias chart, and we're going to get started. If you guys are just tuning in, I want to welcome you. And we had a nice little discussion about, taking losses and drawdowns and, choppy markets. And hopefully, I hope you all were here to listen, but I know some of you did. We're not around. So anyway, okay, let's talk about the euro dollar. So the euro dollar, we exceeded the 113.30. We're sitting right at 113.30 right now, and what I view as pretty key resistance. The euro dollar has been doing a little bit of backfilling, and I have to say the dollar has been really weak. I mean, if you look at what the dollar's done, we've had this massive breakout in the Kiwi, the Aussie. They're both breaking out. The dollar Canadian broke through lows, stopped me out overnight. So the dollars, and the dollar is, pulling back against the. Oh, look at the peso is getting worked right now. Yes, I'm still long the peso, driving me absolutely bananas right now. And this is because risk appetite continues to improve, so the peso is coming down. U.S. dollar, Swedish krona, Norwegian krona is coming down. The euro dollar. Oh, and the cable. Obviously, the cable continues to rip higher. If you look at the euro, excuse me, if you look at the euro and the rise that we've had in the euro, it's been very meager considering the dollar weakness that we've seen. So why is that a big deal? Well, it's a big deal to me because the dollar may find some support. Here's the dollar index, by the way. So here's the dollar index. We may find some support down here at the 618 retracement, which we're currently, sitting above. And if the dollar starts to find some support here, my opinion is the euro is ready to turn lower. Okay, now let's see exactly from the highs to the lows. We're at the 50% retracement. That comes in at 113.50. Okay, and this resistance here, in my opinion, okay, so I'm short the euro, just so you all know. My cost average is 113.39. Here's the thing. I'm not going to add because I just don't feel like adding to any more dollar longs, especially after getting stopped out of the dollar Canadian overnight and the Kiwi dollar last night. I don't feel like stepping into any more dollar longs, but I'm going to tell you this right now. If I was not short the euro dollar already, and I'm up 8.3 pips right now in my cost average. If I wasn't short the euro dollar already, I would be shorting the euro dollar right now, okay? Because the risk reward here is good to be on the short side, all right? Like I said, I mean, I can't tell you guys what to do. You guys do whatever you want to do, but when you look at trades, you can't control losses, okay, because losses are going to happen, but what you can control is your risk versus reward. Like, for example, if I'm going to short the euro dollar right now, I'm risking, maybe, let's say 25 pips if it gets back above 113.60 to make, let's say it drops down to 112.60, 112.40, maybe even all the way down to 112.25. You're risking maybe 20 pips to make 40, 60, 80. That's a good risk reward. Okay, and those are the types of risk reward setups you need to be looking for, especially when the market's been really choppy and you're like, man, I'm getting just chopped up. Then look for the really clear risk reward setups where I'm risking 1 to make 2, risking 1 to make 3. All right, and like I said, if I wasn't short the euro dollar already, I would be shorting the euro dollar right now. Okay, but I'm already short and I don't want to extend my dollar longs at this stage in the game. But I think the euro dollar has got a nice setup for a short here. And maybe even give it a little bit more room to the 618. I don't know, it's your call. If you decide to short it, I'm just saying that you got a decent risk reward here. Okay. Now support, okay, if you're looking at, this is just an hourly. That looks like a ascending wedge after a fall. Okay, so that means that this support right here, the spike low from today, comes in at 113. I would actually just go ahead and we'll write down this support here. Let me grab this. That comes in at 113. That's support today. Okay. Now remember we have housing data today. All right, so we have some housing data coming out, and the housing data, will probably move the market because we don't have much data this week. Thursday we have weekly unemployment claims and Philly Fed, and that's pretty much it. I mean, the data this week is just very minimal. Okay, for U.S. data. So the housing data is pretty much the marquee event of the week, and that's right now. All right, or today. All right. So there's your resistance, here's your support, and if you wanted to short some euro dollar, great. And if it breaks below 113, you might even add a little bit to it. But I think the euro dollar, considering how weak the dollar has been, the euro dollar has not been that strong. All right. Well, anyway, there's the euro. Let's go to the cable. Now the pound, on the other hand, has been very strong. And a lot of that is the euro pound moves have really put downside pressure on the euro. It's kept upside pressure on the cable, but the pound is approaching what I consider pretty key resistance. If you look at, we had that inverted head and shoulder pattern. The right shoulder became a little bit too long, which I think we're more in a triangle at this point. Resistance now, 127% extension comes in at 144.17. So I'm going to write down 144.15 as key resistance. And I will tell you this right now, if we can get to 144.15 in the pound, I'm going to short the cable. So in other words, if we can get up here, I personally am shorting the pound. Okay, that's what I'm looking for. If we can get up there, all right. I don't know if we're going to get up there, but I wouldn't mind being on the short side of the cable there. All right. Support. Support right now is going to be right over here. Okay, so support comes in at 142.40. That's where support is currently on any dip. Yeah, if you're bullish the cable, that's probably where you want to be on the long side if you can get down there. Yeah, so 142.40. What's the high here? 142.35. Yeah, 142.40. I don't know if there's much to do with it right at this moment in time. But yeah, any dip down there, probably not a bad place to be on the long side. All right, let's take a look at the Swissy. So the Swissy, this is another currency pair, in my opinion, that first of all, I'm long the dollar Swiss, but as you guys know, and it's held up really, really well. When you talk about okay, we've seen some dollar weakness. Yeah, we've seen some dollar weakness, but you got the dollar yen and the dollar Swiss that really just haven't backed off at all. All right. Any dip down, this is yesterday's analysis, but it all still holds true. I don't think we can, we can really, do anything much different than we did yesterday. But let me go ahead and move this out a little bit. Let's get rid of this. Set that. Okay. So longer term, just so you guys know why I'm hold on really quick. Okay. Longer term in the Swissy, you guys know why why I've been a buyer down here. You know, a lot of these equal legs, um, trendline support. I've been planning on buying it at 95.50 forever. Finally bought it. Great, long. Um, and you know, the breakout through this channel last week was pretty big. You know, and this is you know, a lot of my gains last week are still really because of this big break higher that we've seen in the dollar Swiss. And frankly, I love the dollar Swiss. I still think it's a great, you know, I think it's a great pair. I love being on the long side of this currency. I love how the pullback has been very minimal. And you know, if you look at it, I mean, this is really, you know, this could very easily just be a flag pattern developing right here, right? If you look at it, we have a move like that, and if the dollar can finally get some legs, you know, underneath it, we might actually get a rally at some point. Now, the big resistance, in my opinion, is going to be, you know, right here at 96.85. Okay, that's the big resistance. 96.85. Right. We may continue to dip lower, and a dip to 96 cents is probably going to be looked at as a buying opportunity for a lot of people if we can get down there. Okay. Question is if. And, you know, if we can clear this resistance, I think then you have like a flag pattern where we have like some really nice upside targets. Now, I'm looking for a lot higher than this personally. I mean, I'm looking for a move well above parity. Well, if I've been planning to buy this thing for the last 3-4 months, which you guys know, 5 months, I've been planning on buying at 95.50. I'm not targeting 97 cents. I'm looking for a much bigger move. I mean, I'm looking for something that looks, you know, like this, potentially up here, depending on what happens with the Fed in the coming months. I mean, I plan on, just so you all know, and I hope I don't have to explain this every day, but I do plan on holding the dollar Swiss for a long time. As long as you know it continues to work in our direction, I'll hold on to it for a long, long time. All right. Um, but the dollar Swiss is something that I've been, you know, building a core long position on, and even if I get out of, you guys know, when I whittle down all my dollar positions, you know, if there's big news coming up, one of them that I won't take down is the dollar Swiss. I want to make sure I maintain a long position in this at all time, a core position. Um, but anyway, it is still, any which way you slice it, it's still in a range bound, you know, environment right now. As bullish as I am at the moment doesn't mean that it's actually bullish at the moment. It's just more of in a big range. All right, dollar yen. So the dollar yen has been impressive, and you know, the thing about the dollar yen that we have to recognize is that we created a lower, or excuse me, a higher low. Okay, you notice how we created a higher low. We got to be respectful of that. Personally, I think the dollar yen is going a little bit lower because it still is diverging quite a bit with equities. Equities continue to plow higher. I think that is just dragging the dollar yen higher. I mean, it is. I mean, if you, oops, I didn't want to do that. Hold on. Okay, so the equity markets, as you can see here, this is the E-mini futures. They continue to blast higher, and it's just dragging up the dollar yen. But the reality is that the S&Ps are still diverging really far away from the dollar yen. So if the equities ever do find a top, which obviously right now it feels like they're never going to, but if they ever do, that's going to have a very negative effect on the dollar yen. So in my opinion, the dollar yen right now is just being dragged higher by the bullishness in equities. You know, you also have um, you know, bonds that are dropping, yields that are rallying. That's assisting this move. So where's resistance? Well, we're going to have to pay attention to this resistance right here, which is at 109.80. Okay. me try something else too, really quick. Okay, so 109.80 is up here. 109.50 is the 88% retracement. No, I don't know if that's gonna. I don't know if that's gonna stop us. So I'm gonna write down 109.80, 109.80. That's gonna be significant resistance. Support on dips. Yesterday we drew that. Okay, right? Yesterday we drew this red line. We were here. See how significant it is? Still, we drew that yesterday. Support, hourly support, support, hourly support. That means this 108.75 is really key for bulls. 108.75. Okay, I'm going to put an asterisk there because that is really critical for the bullish argument. All right, so there we're in a range in the dollar yen. Oh, I'm sorry, we're not. We're in a bearish trend. We're having a counter trend move in a very bearish trend. All right, let's go to the dollar Canadian. I did get stopped out of this overnight. And if you miss my reasoning, I'm so frustrated. I moved my office into a different part of the, or I moved my computers and into our study. I'm taking back the study of the house, and I had it set up in a spare bedroom to be on the away from everybody else in the house. But I have a different setup, a different computer setup right now, and I've been putting it all together. So I was transferring everything over last night, and in the dollar Canadian, I'm like, man, this thing's so weak. And I'm like, I have my stop situated just below 127.50 from a couple of days ago. And I was thinking to myself yesterday and talking to another gentleman, I'm like, I need to adjust my stops lower below 127. I was thinking that last night, and I didn't do it. I didn't do it. I got caught up, moving everything, and then I woke up this morning and I was sitting there talking to traders in the chat room, and then I got stopped out right there, and so I got out of my dollar longs, my dollar Canadian longs. So it's so frustrating too because I made some great money. I took half the position off the table right here on Sunday night. I added back at 128, like 128.50 last night or yesterday. I added back what I sold. Then I got stopped out of everything down here. So, net, I'm lost money on the dollar Canadian. Very frustrating. But I was going to adjust it below the 127 level, and here's the reason why. If you go to the weekly chart or the monthly chart, you take the low from 2011 to the high, the 38% retracement comes in at like 128.70. I know these numbers aren't exact. Where's my magnet? Okay, it's like 126.70, right? And I knew it was down there, and I'm like, man, I should probably adjust my stops below there. And I didn't do it last night, like a doofus. I totally forgot. Anyway, your next question is, well, Blake, are you going to add back, after getting stopped out? And not yet. I want to see how we respond down here. But I do think we'll take stops below 127. So 126.70 is going to be, I put asterisks when I think something is very critical for support. So 126.70 is major support. That's why I'm putting all those asterisks down there. So I want to see how we respond down there. I might actually try to pick up some dollar Canadian longs down there if we can get it. All right, resistance right now. I mean, look at this crap show. What a disaster. Um, and I was saying a little bit earlier, if you guys are getting whipped around in the markets, it's a tough market right now. It's a tough market. I've seen, my gains from last week just, evaporate, and it's frustrating. It is very frustrating out there. All right, so we have to get. Just trying to figure out where, decent resistance is. I mean, you can see on an hourly basis, this 127.50 is now a big deal. Or 127, that higher spike high right there at 127.80. That's probably resistance, 127.80. And unless we break back above that, the downside pressure is probably going to continue to stay strong. All right. One of the other trades that I got stopped out at of overnight was the Kiwi. So here's the Kiwi. Okay. I got stopped out of this yesterday afternoon. I figured we could see the upper end of this channel, but I kept my stops, just above 69.65 just to minimize any loss if it broke above. And yesterday afternoon, it broke above late in the day. So stopped me out. We're approaching, well, we just hit the 127% extension here. And let's see about, we got channel resistance. We're right at 161% extension. Am I going to reshort the Kiwi? Not right now. But I think resistance can take us all the way up to 70.50. Okay. Let me stop being so short-sighted here and let me take a look at something else. We're at 127% right there of the last move too, right where we're at. So, we may stall here between the 70.30 to 70.50 level. A lot of fibs come into play right around here. All I know is support is going to be right back down at 69.65. And we are bullish. Considering that we cleared all this resistance here, I mean, we're in this bullish channel. All right, it's bullish, but dips to 69.65 are probably going to be bought now and today. And so if you want to be on the long side, that's probably the better place to be on the long side as you wait for a dip down here. All right, guys, I'll be back in a few minutes. When I come back, we will continue on with the Aussie dollar index, everything else. So don't go anywhere. Be right back. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. Okay, so we're going to continue on with the Aussie dollar. Let's take a look at the Aussie really quick. All right. So Aussie dollar, we were discussing yesterday, and I had a question about, earlier we were earlier in the day, we were bearish and then we turned bullish in the lunch money webinar. Why was that? And I really think it was because we rallied right up towards resistance here, and we were holding. Okay, so early yesterday morning, it's like, okay, as long as we're below the 77.30, but if we clear that 77.30, then it's going to be obviously, taking on a bullish move, and that's what we've done. And we actually hit the 161% extension here in the Aussie. Now this is going to be key resistance at this 78 cent level. You can see 78 cents is going to be probably pretty tough here. It is 161% extension of this last move. That actually looks like, if I'm not mistaken, that looks like 120. Shoot. Grab the wrong thing. Hold on. Actually, looks like 127% extension, and it is 127% extension, really close to. So this 78 cent level is probably going to be pretty key resistance. We're at it right now. But any dip back down to 77.20 is going to be very well supported because remember this 77.20, this is the breakout point. So 78 cents, 77.20. If you want to be on the long side, being on the long side down here, that makes more sense. Okay, on a dip back down to 77.20. And the Aussie is bullish, right? But remember, we are also at the upper end of our channel, just like the Kiwi. You know, and this may not even be drawn correctly. We could do it like this. This might be. Oh shoot, that's not what I want to do. Yeah, I mean that could be the channel that we're following as we're pushing right into resistance right here. Okay. Okay. Let's go into the dollar index. Okay, so the dollar index, we're sitting here at the 618 retracement. We've already been down here in Asian trade. We're coming back. We're coming back down to retest it. This should be some support down here. I mean, the low today is 94.35. Is it 94.35? No, 94.20. Sorry, 94.20. 94.22 is the 618. 94.20 should be support. I know it's like right where we're at, but I mean this should be support for the dollar. Resistance, we'll have to take this. Right, oops, I have to, let me unmagnetize this thing. Ah, that's resistance right there, which comes in at 94.50, 55. 94.55 is a resistance, okay? And we're in a range here in the dollar index. And remember, longer term, we're at the lower end of our range, okay? Did I tell you guys I had been out of the gym for like the last 2 months, and I went to the gym. I started going back to the gym this weekend, and I don't know if I told you this yesterday. I can't extend my arms all the way out. It hurts too bad. Like I can't like straighten my arm completely because I work biceps on top of other things, but I can't. I look ridiculous walking around. My arms are permanently bent. Right. I can't even straighten them out completely. I look like a gorilla. It's funny. So I'm reaching across my desk trying to set down my coffee and pick up my coffee. It's not working too well. It actually hurts. That's silly. Okay. Anyway. All right. Let's go over to the peso. So this peso has been a thorn in my side. It's like, man, I should have taken profits on Sunday. Just so frustrating because here we are back, closing back in on support at this, 1710 level. I was nice and profitable on Sunday, should have taken it off the table. Here we are moving lower. We're at the 786 retracement right now. 1710 is going to be support, but as long as the equity markets continue to rally, the peso is going to stay weak. So 1709 be support. Which is down here. I guess we're actually 1710. Okay, 1710. Resistance. our resistance is now. It's hard to gauge because this move is such an unorthodox move to have us like, gap up like this and fall and not bounce after filling the gap. It's hard to gauge where the resistance is now. I suspect it's right here at 1750, frankly. Like right through there. We're still in a range in the peso. Norwegian krona. The U.S. dollar and Norwegian krona has come under a lot of pressure due to the the rally back in crude that we've seen. So we're approaching again support down here, which hell we might even make it down towards channel support before it's all said and done, which would be down here. But 812 is support. Resistance is 830 as it has been. We've actually, I'm going to put that in every day. I waver back around that because we're actually in a really strong uptrend. We're just in a near-term downtrend in the U.S. dollar Norwegian krona. So with that head and shoulder pattern, but we're closing in on support here. Aussie's back at 78 cents, by the way. Okay, let's go over the U.S. dollar Swedish krona. And the euro dollar is inching its way up towards highs of the day. U.S. dollar Swedish krona has come back down, and I am barely positive now. Okay. I still think this is really key support, and the reason why, if you guys don't know why, here's a weekly chart. I really don't think we're going to get back down there again, but you can see that weekly doji hasn't done anything, at all. I mean, the lows come in at 80, basically 803, 8.03, which is critical support. And resistance right now is 830. The highs right, or I'm sorry, not 830. That's the Norwegian krona. 818. Okay. We could end up, depending on how things pan out with the dollar, we could end up, doing some sort of inverted, head and shoulder pattern, possibly, but we have to really hold around current levels. That's not even an option right at the moment, but 818 is going to be pretty key. All right, we're at the lower end of our longer term range. So there you go. There's your bias chart. Let me see if I can take some questions. Yeah, JB, kind of like that. Yeah, minus the muscles. Yes, Ziggy, that's probably more like it. These guys are tweeting me some funny pictures. All right, let's go into some questions.